New to the stock market? Then you need to understand oil. In the United States, the Ford F-150 is the most popular car. Gets about 24 miles to the gallon, and the average American drives about 13,000 miles a year. Given today's current gas prices, that means each American is going to spend, on average, $1,800 a year on gas. If we add in flights, heating oil, plastics, and other petroleum products, each of us is going to consume about 25 barrels of oil. 42 gallons in a barrel, that's 1,050 gallons of oil each year. But we need to supply that demand with something. And in order to do that, it's various countries around the world that suck up oil out of the reserves and put it onto the market. And it doesn't cost each of these countries the same thing to do so. Saudi Arabia, to pull a barrel of oil out of the ground and sell it, costs about $10. Russia is 19, Brazil is 80, the United Kingdom is 45. Shale gas or fracking, which in the United States costs between $40 and $70 a barrel to extract and get to market. So as the price rises, it incentivizes more countries to produce, right? If Saudi Arabia is producing oil at $10 a barrel and the barrel of oil on the open market costs $5, they lose $5 a barrel if they produced a barrel of oil. So they wouldn't. Same thing with the United Kingdom at 45. Oil needs to be above 45. Same thing with Brazil. Oil needs to be above 80 for it to make sense for them to pull the oil out of the ground and give it to people. We saw this exact incentive price problem play out with fracking in the United States in 2010. Brand new technology, opened up all sorts of different real estate to extract oil and gas. So we did. We fracked a lot. And the price of oil from 2010 to 2014 was between $80 and $100. Well, in 2014, all the supply from the newly fracked oil out of the United States drove the price of oil from $100 a barrel down to $26 a barrel.
Now, what percentage of what you call the marginal producers in the shale arena here in the States may have to go bankrupt before all is said and done? Half of them.
In 2015, this caused a 367% increase in bankruptcies for oil and gas companies in the United States. Right? If you produce something for more than you can sell it for, you run out of money, you can't pay your debts, you go bankrupt. That's exactly what happened. This break-even oil point is really important to consider as we watch the price of oil rise right now above $95. We know that this is becoming a profitable place for frackers to come back in and produce. And we're seeing that. The Baker Hughes oil rig count is ticking up. It's well above its 2020 lows, and it's really starting to climb into where it was in the 2019s. So we won't see the price of oil rise forever because people that have oil, they want to sell it. And when it's profitable to sell it, they're going to sell it.